Evening star, fancy clothes, fancy cars. Hey, 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 good evening. We start officially by 11 p.m., which is 10 minutes from now. So if you're going to stay with us, make yourselves comfortable. And if you're not, well, I hope you have a wonderful day or evening or afternoon, wherever you are. Welcome, welcome. We start in 9 minutes. If you are a newbie, this may be a little bit advanced for you. But if you are already experienced, you're welcome to stay. Let's see, what am I missing here? Good luck. Hi, good evening. How are you? I hope you had a good day. Welcome, welcome to the live. Let's see who we have here. Sanele, welcome. Oteng, welcome. Smile, how you doing? Good luck already said good evening, but here's another one. Good evening. Tuli Dapomola Wandi Sekwale. I hope I pronounced that correctly. Good evening. Big God's Plan Filippo Dollar, Lyrical One. I see you're here, Lyrical. Good on you. Kimberly Bacchus, welcome to the live. Let's see. We're starting in 8 minutes. Thank you for the likes. Thank you for being here. I just thought I would pop in here early so that we can talk. Lyrical, good evening. I'm very happy to see you here. I really, really hoped to see you, and I'm glad that you're here. I'm really glad. So today, it's for everybody, but I'm addressing you in particular. I want to help you simplify your life. So we're going to do that, okay? Good evening, Smile. Lovely to see you. Thank you for liking. Sir Lord, hello and good evening to you too. How are you? I hope everything is fine in your corner. Your blessing. Thank you for liking the live. Welcome. Let's see who else is in here. Mariam Third, welcome to the live. EAA Eric, hi, nice to meet you. Seppo, welcome. So we're gonna be just saying hi and shooting the shit until the next 6 minutes or so. Today, I'm going to simplify things because someone in the group mentioned to me that every time they open the charts, they are very confused. I understand. So I'm going to keep things as simple as possible. And I'm not starting until 11 because 11 is the official time. It would be robbing others of the opportunity to learn. So if you want to scroll away, go do some other things and come back, that's fine. I'll be here. I'll probably be here an hour. It's been a while. The last live was on Thursday. I had to take Friday off. Big Baby, hi, welcome. Let's see who else is in here that I haven't said hi to. Rogue Introvert, hello. Darby, how you doing? Bams, Bernard Gatonga, welcome. Karma and Tash, welcome to the live. V-Mask, welcome to the live. Thank you for the likes, Lyrical One. If you have questions, now's a good time to ask me before we start. Trading related questions. Or you could just bounce, really. That's fine. 6 minutes time we'll be starting. Reagan, welcome to the live. Okay, let's see what I have here. No, definitely not. Definitely not. Hey, Big Baby, you're very welcome. And that's my alarm. 5 minutes more, and we'll be getting started. Who else is in here? Let's see. Benik Malusier, welcome to both of you. Ajibade, welcome. Ajibade, welcome. All right, I'm back on. Back on here. Bernard Gatonga, thank you for liking the live. Hey Charlie, welcome to the live. We start in 5 minutes. Again, if you are a beginner, a complete beginner, it's going to probably be confusing for you. But if you're like some people on here, you've had maybe 4 months of experience understanding the terminology and the charts, then you're welcome to stay. As always, I do my best to simplify things, but there's only so much I can do. If you are new and you want to learn how to trade, my advice to you is check out babypips.com, babypips.com/learn. Or you can check out learntotradethemarket.com/forex-university. I'll take them both one more time. babypips.com/learn or learntotradethemarket, singular market.com/forex-university. In roughly 3 minutes, we'll be getting started. Hell, I wanted to send you a chart on H4 for gold. I would like you to look at it and confirm the FVG. Let me see. Let me see on my end. I'm not ready to flip the camera around yet, but I can check it out. Okay, so right now it appears to be closed. Let's make sure my network is on. Yes, it is. There is an FVG on gold. There's two, actually. There's two of them on the 4-hour chart. So what I have, I'll show you when I flip it around. Or I might as well just flip it around since we're here. 3 minutes. Just really quickly. I'm not trying to like it. I'm trying to flip. Yep. I need to change the color as well. Anyway, there is an FVG. There's this one from here to here, and there's this one from here to here. And we're starting in 2 minutes, guys. Simpiwe Sabani, thank you for the follow. Patty, hey, welcome to the live. Bams, I wanted to ask, is the OB on 1 hour valid for gold? The order block on the 1 hour. Here's the thing. There's a fair value gap before that order block. But wait for the price to get there. Okay? Wait for the price to get there first, and then you see how it reacts before you jump into a trade. Caught one on that gold today before the heavy drop down. Take the trade and go down straight. Good. Simpiwe, thank you for sharing. 1 more minute. Okay, time to set up my chart so that everyone can see clearly what I'm talking about. Yes, perfect. Yeah. Perfect. All done. Well done. 13 seconds and we start. Hey, Miss Star. Welcome. I'm glad you made it. I'm really glad you made it. So guys, it's always 11 p.m. Nigerian time. And right now it is 11 p.m. So I try to be on time if nothing else, and we shall get started. So today, I'm really focusing on you, Lyrical. You raised a complaint that I'm pretty sure many other people have, which is that you open up a chart and you have no idea exactly what it is you need to do. So I'm going to start things from the very beginning, and then we will talk about what happens when you open up your chart, which we've always done anyway, but I will be a little more Maybe not slower, but basically, I'm going to make sure that you get it. So let me grab my text here. Good evening, good morning, good afternoon, good whatever time it is, wherever you are. My name is Nessa. Also, I take ticks on TikTok. And today I will be talking about a simple concept of liquidity, which is the story of price. What you see on your charts, I know that it might be difficult to look at all of this and think of it as a story, but I promise you that it is, and I'm going to help you understand how to interpret that story and how to find your place within that story, where you enter and where you exit for profits, and where you enter and where you exit to manage your losses, because not everything works 100% of the time in Forex, in trading in general, no matter what asset you're trading. And if anyone has ever sold you on the idea that there is a holy grail means something that is well sought after. It's the best thing ever, the best strategy that allows for zero losses. I'm here to promise you there is no such thing. I'm here to deeply disappoint you on purpose. And I know that it may sound very annoying right now, but later in the future, you will thank me for disillusioning you and disabusing you of that notion that there is some sort of strategy where you only ever make money. You are in the business of probability, which means that all you're doing is looking for something that plays out over and over enough times for you to exploit it to make something. Some of those trades you take, you can go through the checklist and make sure that you are following every single step faithfully, and the trade will still fail. But you must understand the metric for success in trading is not a single trade, nor is it whether a trade makes profit or not. It is whether you're able to continue to honor the system that you have in place. That is what will determine your success in the long term. And it's also a matter of considering how you perform over a series of trades instead of just one or five or 10. Okay, so let's keep that in mind just to keep things in perspective. I don't want to be here to sell you Lambo lies. Let's be honest. So with that out of the way, I said I was going to talk about the story about price, right? So the first thing about it is everything that you see on your chart is about money, obviously. Is money moving up, money moving down? And this story, the title of this story is liquidity. It's very simply money as well, but we can call it liquidity. Anytime you hear the word liquidity, for those of you that are familiar with ICT type traders or whatever, when they say liquidity, they're just talking about the areas where there's pools of money that you can take advantage of. Because what the price is really doing every time is it's looking for where to pick money up from and where to drop it off at. And that's what I'm going to teach you today. I'm going to show you how to get that. So, first things first, you must always do whatever you're doing within the context of a trend. Okay? If you're not doing it within the context of a trend or at least a bias, then you should not be trading. You should be able to ask yourself, what direction are you leaning toward and why? And here's the thing. So, for instance, if I say to myself, for whatever reason, let's say this bearish candle hasn't happened. If I say to myself for whatever reason that because I'm looking at this bullish push here, I will only be looking for buys after this candle closed, then when I go to a lower time frame, because this is a 200 pip range bar, when I go to a lower time frame, I'd better be looking for reasons to be a buyer. And if I get none, then I get none. And that's it. That's the end of the day. If I do get one and it plays out, great. If I get one and it does not play out, then great. It is up to me to sit on my hands, to have determined today I'm only going to lose or be willing to lose 2% of my account. And if I hit that 2% limit, then it doesn't matter. I close my charts and I'll come back tomorrow. All right? These are the little things that help you to succeed. It's not the strategy itself as much as it is what you do. So let's talk about liquidity. Liquidity is the foundation of everything. Liquidity is not a strategy, at least not to me. It is a story. When you understand liquidity, you can use whatever strategy it is you're using, whether it is a break and retest, support and resistance, moving average crossover, I don't care. You can use whatever it is you're already using and just refine it so that your entries are better, your exits are better, and you are quicker about getting out of losing trades. Because here's the thing most people don't realize, you don't have to wait for your stop loss to get hit before you get out of a trade. But for you to be able to get out of a losing trade in the first place, you have to not prioritize tight stop losses. You can, and I've shown you in past lives how to get tight stop losses, but I'm recommending you consider giving your trade room to breathe. Okay, so now that we know liquidity is money, and now we know that the importance of discovering the trend, which is before you open up, before you do anything on here, you have to ask yourself, what's the trend? Okay, is it a bullish trend? Is it a bearish trend? And if you are not the kind of person who wants to work with a trend, you just want to pick a bias because, for instance, if you were working with this, what happened here? The market only pushed up a little bit before it crashed down. All right? If you just want to work with a bias, then you have to ask yourself these questions. Do you want to be a seller and why? For instance, yesterday, I put a pending order here because I wanted to sell. Unfortunately, it didn't pick me up and it left me behind. And this is a whole almost 200 pip move in a single day. But that's besides the point. So let's get to it. Once you are aware of what the trend is, and I'm assuming that a lot of you already know what a trend is, okay? Where uptrend, you have highs continually getting broken and lows being respected for the most part. Sometimes a low will be disrespected. It's okay, and it'll continue pushing up. For a downtrend, you have highs being respected while the lows are getting broken or disrespected. And sometimes a high will get violated, but that doesn't mean it's ultimately a change in trend. You already know this. So once you've determined what the trend is or what your bias is, the next thing you're asking yourself is, number one, where is the money coming from? Number two, where is the money going to? And number three, is there enough room to take some for myself? Now, these three questions, they all hinge upon something called the range. Okay? So, historically, I've always said to you, a range is a series of, no, is the distance between two price points. And I've told you that those two price points, they could be anything. They could be anywhere from, let me grab a horizontal line here. So your two price points could be this close. This area between the two of them, that's a range. Or it could be this far apart. That's still a range. But the question is, how do you determine a range? I hope that, hang on a second. I hope you're paying attention. So, Lyrical, here's the thing. If you cannot find these two price points, you don't trade. And so I'm going to show you how to find those two price points, right? There's multiple options. Number one is you can use the high and low of a candle, okay? That candle could be a Japanese candlestick. It could be a range bar. It could be a Renko bar. That's up to you. If you're using a Renko bar, you already only have two price points to deal with in the first place. So, Lyrical, if you're thinking about what I'm saying to you right now, I have just simplified your life. But I'll explain, I'll still get to it. The second way you can define a range is by using swings. Okay? And what is a swing? The turning point in price. So I'll show you what a swing is momentarily. So let's talk about a swing. A swing is a literal turning point in price, and you're looking at some of them right now. The whole idea is when the market is pushing in one direction, let's start from here. So you have this market creating this low, and then it pushes all the way to the top side, right? Once it pushes up and it starts to pull back, you're looking for a 1, 2, 3 pattern. So in this case, this was a swing that got violated eventually, but stay with me for a moment. Let me get this off the charts, my viewing indicator. I need to get rid of this. Yeah. So what you're looking at, let's start from here. This is a swing low. It is a 3 candle pattern. The swings are a 3 candle pattern. The candle in the middle for a swing low, also called a bullish swing, has the lowest price of all the three. This guy's low here, this one's low here, this one's low here. This is the lowest one. And in a sense, because the market is fractal meaning whatever you see on a high time frame, you can see it on a lower time frame as well, but played out across multiple candles. This, if it were a regular time-based chart, it would look like a head and shoulder formation. Over here, you have a swing high. I'm going to ignore this one for a bit. It is a swing high as well, but I'm coming here because I want you guys to see the very obvious beginner type shit that you can spot easily. You have 1, 2, 3. Because remember, what did I say? The swing is the turning point. Look at the way my cursor is moving on purpose, turning, quite literally. It is the point at which the market's been pushing in one direction and then it makes that turn. That turn can be identified with 3 candles. So you have 1, 2, 3. This is your swing high or a bearish swing. 1, 2, 3. The middle candle has the highest high of the 3 candles. 1, 2, 3. This one's the one with the highest high. All right. Now, how do you use this to spot where there's liquidity? It's simple, or where there's a range rather. So when the market has formed a low and then it pushes on up and it starts to form the high and it's created that high, guess what you now have? You can mark the entirety of this. Let me change the color so it's something easier to see for everyone. So this is me marking the lowest point of this swing low and then the highest point of this swing high. And essentially, so pretend all of this candle here where my cursor is and up hasn't happened yet. What you have done is create a range. Okay? Let's do one where we have the swing high first and then the swing low. So let's look at this example here. You have this 1, 2, 3 swing formation. Okay? Then you have, let's get this out of the way, 1, 2, 3, another swing. So now we can mark, excuse me a second. Yeah, we can mark the high. And as soon as the market starts to turn around back up like this, you now have a low. The low is officially here, this area here. Okay, so I'm pulling that back so you can see what it is. And in this example, the stuff outside of the box has not happened yet, but you now have a swing. Okay? Lyrical, are you here? I promised you I would focus on you while everybody else is learning with you, but I need to be sure that you understand this particular way of drawing a swing. Awesome. I love that. So that's the second way you could do a swing. A range. So you have, first of all, the high and low of a candlestick, which means literally pick any candle, a single candle. You mark the high and you mark the low. So what does arrangement mean? It is simply a series of prices. Think about it. So this price here is 1.56445 all the way up to 1.58488. So there's prices in here. So when I say a range, think about the meaning of the word range. Range simply refers to a series of things. Okay, so if I say they have a range of cars, Hyundai has a range of cars, then you know that what I'm trying to say is Hyundai has different makes of cars, right? But it's all Hyundai. Okay, so if I say there's a range of houses by this real estate company, you know exactly what I mean. Now there's a range of prices on this particular chart, which is EuroCAD. So that's what the range is. If it helps you, you want to call it a box, that's fine. Okay, just in case it's probably the English that's bothersome. Japanese candlesticks is still the same thing. If you're using, this is a 15-minute chart rather, each bar counts as a range. Again, this concept is the same. I need you to think about the meaning of what I'm saying and don't lose yourself thinking about the specific tool. Again, I said it's a story. Okay? There is a reason that I'm steering you toward range charts and toward Renko charts. It is because it is just that much cleaner. It just is. So I'll take you back here now. Let me pull up my notes. 1 second, let this load. It's going to take a while because it's 200 pips that need to be repopulated. Any second now. There we go. So the first way, using the high and the low of a candle. It does not matter if you're using a Japanese candlestick, range bar, Renko bar. All of these things have highs and lows. The second way is to use swings, the turning point in price. So you've seen how to mark a swing here. See how to mark a swing on a Japanese candlestick is the same thing. It's the same thing. Look at this swing over here. Let me stretch it for you to see. 1, 2, 3, that's a swing. 1, 2, 3, that's a swing. 1, 2, 3, that's a swing low. But then it gets broken because this was a massive downtrend. If you pull back and see for yourself. Okay? It's the same thing. When it comes to a Renko, there I would understand you asking for a Renko example. I'll show you really quickly. So let's go to, say, let's just do a 10 pip Renko bar chart. So what you're looking at is a Renko bar. And basically, for a swing, you can see it right here. 1, 2, 3. The thing to note about this is this here is not necessarily the low of the swing. The market may have traded down a little bit, but because it did not push all the way up to 10 pips, since it's a 10 pip Renko bar, you won't see the wick. But that's your swing here. And that's your swing here, and there may be a high over here, like something else that was traded through, but you won't see it because, again, it's a Renko bar. So if I have the market turning from this point here, and then pushing up, and then it starts to make this turn here, what do I have now? I have all of this. Let me right click, change the color again. All of this becomes my range. Okay, from this point to this point here, and I stretch that back. That becomes my range. Okay? Alternatively, if you want to use a single bar as your range, you can. And this is where, lyrical, I need you to pay attention. Just one bar could be your range. So let me show you. This is a 10 pip Renko bar chart, so I don't recommend it, especially for a very volatile pair. I would much rather use like at least 25 pips, maybe 50 pips. But you said you were confused about what to do every time you open up your charts. Okay, it can be as simple as this. I'm moving up to a 25 pip Renko bar chart. It can be as simple as this. The only reason I keep having you flip to regular time charts is just so you can have that added confluence. But then again, like I said, you're playing a game of probability, so it's not that deep. As long as you're not risking too much. You don't know what to do? It could be as simple as this. You've come to your chart and you've opened this up here. And you've drawn this from here to here. And then we'll apply the rest of what I've been talking about to this Renko brick. So I'm going to stick with Renkos just for a bit. Bear with me. There's something I'm trying to show you. So we've talked about the different ways you can draw this. You can also do, and this is not my preference, I don't like it, mostly because I do not have the appetite for switching my time up and down. You know, the London, what do you call it, the New York people, they use daylight savings. In March and November, I think the clock goes back and forward by an hour. I don't have the time to track that shit. I don't care for it. But if you want to, that's fine. You can use that and mark your Asian session range, the trading period there. That could be a whole range for you. You could mark the London, mark the New York. I don't do that, okay? That's one of the things I did not like about ICT's method of approaching this, that I decided I need something that works whenever it works, period. So let's move on. Now that you know what a range is and you know what liquidity, that is all about liquidity, this is the thing. How do you find the liquidity? You use the ranges to find liquidity. So liquidity, let me straighten this, rests at the highs, two places actually. There are two kinds of liquidity. Let me start with that. There are two kinds of liquidity. Okay? Number one, you have external range liquidity. And number two, you have internal range liquidity. Remember, the range is the box. So when I say external range liquidity, I simply mean money outside. External to, money outside of the box, okay? And when I say internal range, it's simply money inside the box. Now there's two kinds of monies outside the box. You have the one to the top side, highs, and then you have the ones to the downside, lows, okay? And I'm going to get into, I think it's around here that you start getting confused as well. The second kind, now there's multiple kinds of internal liquidity, but I only ever pick two because I believe in simplicity. If you know too much, you will fuck up. Pardon my French. You will be utterly confused. You will see too many things at the same time, and it will destroy you. Take it from me. I've done this for 10 years. I spent 9 of those bloody years learning all kinds of things I did not need to know that messed me up. So just focus. This is not like when you're in school and you go and you learn a lot of stuff to impress the teacher or impress your parents with an impressive grade. This is not how this works. The simpler, the better. The less decisions you have to make during trading, the more effective your trading will be. Please do not make the same mistakes that I did so that you do not take as long as I did to master this. So the first kind of internal liquidity we'll talk about is order blocks. And the second kind, fair value gaps, okay? Both of which can be bullish or bearish. So let's talk about external range liquidity or money outside of the box, which is highs and lows, the rest of the highs and lows, okay? Let's move this out of the way. Now, this is the whole idea. If you have a range, like here, the whole idea is this. If the market plans to push down, let me start from the top. First of all, you must decide what kind of trader you are going to be. Are you going to be the trader who looks for money that's outside the box and then uses that as an entry signal and then exits somewhere inside the box? Or are you going to be the kind of trader who waits for the price to go back into the box and then you take the money from inside the box outside the box? I will repeat myself again. Pick one. You do not need the two. If you pick one, I promise you, you may not have as many setups per week, but the setups you have will be ridiculous. Again, are you the kind of trader who, once you have drawn your range, the box, you take money from outside the box, which means in this case, you would wait for the price to retrace into here? And then from there, you would take the trade down into the box? Or are you the kind of trader who, right now the price is here, you're waiting for it to retrace into the box so that you can take it from inside outside? So there's from outside to inside, there's from inside to outside. Pick one. When you pick one, do you see how your job is simple? So that this is not stupidly impractical, I'm going to show you. Let's quickly touch on a couple of things and then I'll take you through both scenarios, right? So we said we're going to talk about highs and the lows. The whole idea, if you are the outside the box to inside the box trader, it is this. Let's say in this case, as you can see, you have a bearish trend. The whole idea is you want to wait for the market to retrace or to be outside of the box. Okay? And then you're going to go to a regular time frame chart and look for your breaker market structure, the other stuff that I'm going to teach you to play out, to confirm to you. Basically, let's just say you're going to look for confirmation that the market is ready to push down. And then based on that confirmation, you'll enter. Heck, as I've told you this now, I don't even need to get into anything else. If you guys trade, I don't know, moving averages, Heikin-Ashi, whatever it is you use to get into your trades, the point is, if the market comes here and you see your setup that you're supposed to use to sell, then you execute and it either works or doesn't work. But if it does work, that'd be great. And this is a 25 pip block, which means whatever you're doing, you want to get at least anywhere from maybe 20 or even the heck 25, or you could hold for much longer. It depends on you. Ideally, I like to say you should get out at the midway point of the box. And that's because usually at the midway, there's always some sort of reaction, because there's a balance of buying and selling. And at that point, anything could happen. The market could decide to bounce off of that or off of just below that 50 and take off in the other direction. That's why I always recommend, if it's getting to 50%, at least move your stop loss to break even. At least take something off of the table, so that way you can let the trade do whatever it does. If it takes you out, you don't care because you took something from the market. And if it goes your way, great, awesome. Then you can start trailing. So, this alone, without me talking about anything to do with internal liquidity, if all you understand, this is what I keep trying to hammer on, that I think I feel like I may have not done so as well as I thought I did, which is basically everything I teach you, pick one. How to draw a range, I've shown you multiple examples. Pick one. Internal or external liquidity for your entry, pick one. Internal or external liquidity for your exit, pick one. Just pick one. Okay? So I've shown you that basically when you have a range, if the market intends to actually push to the downside, the odds are high. This is for those of you who take money from outside the range to inside. The odds are high that if the market wants to push down, it will first take the money that is above the range. It will first attack that and then go down. Conversely, if the market wants to push up, okay, it will first attack the money below the range before pushing up. That's all. Why does it do that? So let's talk about it. In this case, I said the market is going to attack what's up before pushing down. Why does it do that? Because there are people who are convinced that once this high is broken, and mind you, this applies not just to the Renko, it applies even on your regular Japanese candlestick. It applies even on a swing on your regular Japanese candlestick as well. But I am using Renkos deliberately because I want to make this stupid simple. If there's money here, why is there money here? Because we've been taught that when the market makes a push or you have that swing or whatever, you're going to have your stop loss at the high. That's what everyone knows, right? So what's going to happen? Your stop losses is all money. It's all liquidity. The whole point of the people who make the market existing in the first place is they want to make money, and they're going to do so with your money as well. So they're going to come back here and tag you out. As they're doing this and breaking this, there are people watching that up move and saying, oh my God, it's bullish. Close your sells. Buy, 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 buy. Okay? So they're doing that. And then there are people who already sold a little too early, who are here, they're feeling happy, they're in profits. Now they're panicking too because their stops are here. So their stops are here. And apart from their stops being here, you have the buyers who are jumping in here as well. So what happens? They hold it here for a little bit, and the next thing you know, they yank it back down. So now they've taken the stops of the early sellers. And not only that, they have tricked people into buying. So they're coming back the other way to take the stops. Let me show you for the bullish example. So in this case, what do we have? If the market plans to push to the upside, what's it going to do? First things first, it'll come and attack the lows. Why is it doing that? Because as it's dropping to the low, two things. There are people who have already bought around here. Their stop losses are here, and they want to take those stop losses. Why? Because those stop losses are money. Money, liquidity, same thing. They're coming for those, and at the same time as the price is pushing down, they're convincing people that, holy shit, this is a breakout, guys. Sell, sell, sell immediately. And then there's people selling at this point here convinced that the money's actually going down. But then what? They whip it around. And then at this point, they're coming back and they're taking here. All the sellers, all the people who are selling here, they're taking their stop losses as well. That's how it works. This does not mean that you will never be liquidity. There's something that I used to hate about certain groups with certain traders, where they just be like, okay, maybe somebody lost a trade and they say, oh, thanks. Someone tells them, thanks for being liquidity. I hate that pompous ass shit, because you too can be liquidity. Like, where do you get off talking down on people like that? That's rubbish. So what I'm trying to say is that things may not necessarily work out all the time, but when you have this story in mind, you see how immediately there is no nervousness about what to do. If you open up your chart and this is the brick you see and all of this other stuff hasn't formed, then very simply what you're going to do is set an alert for down here. And then sometimes the market will not even bother coming down here. It'll go and print this brick, no problem, don't care. Set an alert for up here then and wait to see what happens. Because again, you are playing a game of probability. Not every trade you take is going to work out. It is impossible. I don't give a fuck who's telling you that they win every trade. It is impossible. They're lying to you and they're about to take your money. Run. So the whole point is You're playing a game of probability. So now, if you are the external to internal liquidity trader, meaning you are the trader who takes money from outside the range and then gets away with it inside of the range. So, in other words, your entry is somewhere outside or at least close to it, and your exit is somewhere inside of it, then you know exactly what you're supposed to do. Okay? On the flip side, so now I've defined for you how liquidity rests at the highs and the lows. So let's come down to the other kind of liquidity, which we say is internal range liquidity. Now, you're not going to spot this on a Renko chart. I will admit that. However, what you do is once you mark your high and low of any bar, all you're having to do, and what I'm going to do now is I'll have multiple boxes because I know there's a chance that some of it may not have played out, and I don't want to have to keep scrolling back and forth. Excuse me for a moment. Let me mark this. And let's have this one here as well. I don't know if this is a good example because EuroCAD just really shat itself today. It was amazing. I was so sad I missed it. Anyway, we'll get another one. So, here, let's start from here. Let me zoom in. I need you to see this. Remember that each of these squares you're seeing, they're worth 25 pips, okay? So what do we have here? The market created this bearish Renko brick. And then from here now, you could be saying to yourself, okay, in this particular case, there was no pullback to that point. But it doesn't matter because I'll explain why. Let me come back to the Renko before I continue this. I want to show you something. You know, just as you can work with already established prices, you can actually make projections as well. What do I mean by that? This is a 25 pip Renko bar chart. In other words, I can go ahead and place this, see this candle right here, this tiny little candle. It has not finished forming, it's still in the process. But I can go ahead and place this here and project this. And you know what that means? That I can now treat the open of this candle that is still forming, I can treat that as external liquidity. I'm going to repeat myself. So remember what I was telling you before was you have the option of once a brick has formed, wait for it to retrace. That is still very valid. But in this particular situation, the market pushed very strongly, very, very strongly to the downside. So it did not give us that opportunity. In which case, I'm saying to you, you can treat the open of a new bar on the Renko chart. Okay, this is a 25 pip Renko bar chart. You can treat the open as the area that you start looking for internal range liquidity to exploit. And I'll explain. Let's go down to the 15-minute chart once more. So in this case, we have these Renko bars you can see. Unfortunately, each one was created, there was no retracement into here. So on this day, if you were waiting for the previous bar's close price to get rated, it wouldn't have happened for you. Nor would it have happened here as well. But in this case, if you were using the open of the next bar, so this bar closes and then it opens the next one over here. This is the next bar that opens at this point here. All you'd be doing is observing the price action that happens along this line. This is a 15-minute chart on EuroCAD. So there's multiple ways you could have approached this. If you wanted to, we're going to talk about the different kinds of liquidity, and then we'll talk about how you could have approached taking this trade. First, you have order blocks, okay? So what is an order block? An order block is what you have when, let me zoom in on where this move started, is what you have when there is a low that has been created, okay? That low gets broken. It's not the best example, but stay with me. I'll find you a better one. Let's go to the 5-minute. I need you to have a beginner-friendly one, and then you can start training your eyes to see when it's playing out on a lower time frame. You have a low. The low gets broken. Okay, broken by a candle with a full-on close. As soon as that happens, you're looking for the last bullish candle that led to that push down. That last bullish candle is your bearish order block. I'll repeat myself. Hang on a sec. Let me make this visible for you. Okay, let's talk about it again. You have a swing low. This swing low eventually gets broken. This is the candle that broke it. As soon as this candle breaks it, as soon as the low is broken, the last bullish candle that led to that down push is your order block. The whole idea here is when the order block is created by this low getting broken, the last low, you wait for the price to retrace into it. You could have a pending order. Okay, you may not want to wait, you may just set a pending order. Have your stop loss above the high or above this high here. And then there you go. The market reaches into it and then takes off from it. So that is a bearish example of an order block. Let's look for a bullish example. In this case here, what do you notice? This is a high. Excuse me. This is a high. This high gets broken. And interestingly enough, as soon as it's broken, it's the same bar. So unfortunately, you would not probably have been able to trade this unless you were on the 1 minute. But when it's broken, this automatically becomes an order block. Let me draw that out for you as well. Right clicking, changing that to white, and changing the color transparency. Boom. This last bearish candle that sponsored the move that broke this recent high is an order block, a bullish order block. Whenever you have two candles that are the same color, so you have the order block here, this is a bearish candle, and is preceded immediately by the bearish candle, then you can mark both of them as your order block. If this one were bearish as well and it was high like that, you could mark that as well. Let's look for more examples. One that actually played out. So look here. You have this high. It got broken. And as soon as that break occurred, what's the bearish candle that led to the move? It was this guy over here. So let me mark that out for you. Here. And now, excuse me, trying to straighten this out. So this is the high. It got broken. As soon as it got broken, this became an order block. The market tapped and reached into it and failed to push past it. Then for added confluence, in case you were afraid to get in for whatever reason, you see this here. What is this? 1, 2, 3, a swing formation. What did I say a swing is? The literal turning point in price. So a swing becomes really valid when you pair it with liquidity. What is the order block? It is liquidity. It is internal range liquidity. Okay? What is this order block inside of? Why are we calling it internal range? Well, because, pay attention, we had this low here, and then the market started to push up to a high, and then it started to retrace from that high. As soon as it starts that retracement, we have a low, we have a high, and now we have our range. Remember, this wick hasn't happened yet. And now we have our range. So the order block is inside of that range. This is a swing to swing example of sorts. Not the best, but you get my point. Okay, if I was to drag this all the way up to here, that would be more valid for a swing to swing thing, but you get my point. So start to understand the story. The story is the market starts off pushing in one direction, and then it starts to retrace from that. And now you have yourself this range. And inside of the range, there are 3 price points you need to be concerned with. So I'm going to go back to our notes. Let me drag this here. There are 3 price points you need to be concerned with inside of a range, okay? We'll talk about fair value gap soon. Don't worry about it. We have number 1, the premium. No. Start with equilibrium. Equilibrium. Number 2, premium. Number 3, discount. So the whole idea is when you are in an uptrend, okay? Look at this example. We've been pushing up like this. When you're in an uptrend and you're able to identify a range, let's grab this. See, why am I choosing this? It's a low. It led to this whole move to the upside. This is the first significant retracement we had here. Okay, 1, 2, 3, and then started pulling back. So I'm going to mark the high as well and drag this back. Okay, when you have your range like this. Once the price is in, this is the 50% point. This is called equilibrium. It's balance. There is a balance of both buying and selling activity. Anything can happen at any moment at that point. You could expect some sort of reaction. Whatever reaction you get from that 50% point is probably not going to be long lived. Okay? But this is 50%, it is equilibrium, it is balance. Anything that is below 50%, to the other side of the range, to the downside, these are your discount prices. You want to buy things when they're at a discount because they're cheaper. Okay? And this is clear. This is also something to keep in mind. You want to be a buyer at discount when you are in an uptrend. Bear in mind that the trend is important. Just because I'm talking about liquidity and ranges does not mean the trend no longer matters. A trend will always be trendy. So, when you are in an uptrend, you're looking to be a buyer. If this were a downtrend, if what we had before here was a downtrend, and you have drawn this box here, you would be looking for prices that are above 50%. That's the premium portion of the range where you'd be looking to be a seller from. Please do not attempt to sell the premium portion of a range in an uptrend unless it is a high time frame uptrend that has shown you a high time frame bearish retracement. Okay, what do I mean by this? So let's go to the daily chart as an example, right? The market pushed up like this, and now it's pulling back. So to someone who trades with the daily or the weekly chart, this little pullback here may not mean anything. But for you, the day trader, the one who closes trades at the end of every day, or the one who scalps, are you kidding me? This is 100+ pips. That is a massive move right there. So that's what I mean by the only time you could be selling the premium portion of a range is if you have ascertained on a high time frame. And how do you know that? Well, here's one way I'm looking at right now. 1, 2, 3 swing formation. Maybe the market plans to follow through on that swing, because what is a swing? Remember, turning point in price. Not every swing will play out, but you get the point. So then it would make sense for you to try and see what you can get from this. But then you would be really quick about taking your profits, because at any point, the market could turn around and continue the trend. And it did that. It did that. All right? Same thing with buying the discount portion of a range in a bearish trend. Don't do it unless that bearish trend is a high time frame bearish trend with a bullish retracement. That way you know there's more than enough pips for you to take something from. But let's not confuse ourselves. You can keep your life simple and just say, I'm only going to buy in a bullish trend when the market is in the discount portion of a range. Or I'm only going to sell in a bearish trend when the market is in the premium section of the range. And there's something else that I have said once before, but I will bring it to your attention again. Did you know you can simplify your life by looking for only one kind of setup? I don't know about you, but I know that some traders are better at seeing buys than sells, and some seeing sells than buys. I'm in the latter camp. I'm very good at seeing sells. I'm not trying to say I can't see a buy trade and act on it. Indeed, I have. But I'm trying to say that I've noticed I lean more in one direction. And you can do that too. If you do that, what you're essentially doing is you are reducing the chances for you to take trades that are stupid. It's basically about just picking one thing and sticking to it. So all the things I'm showing you, pick one. Just pick one, pick one, pick one. Now let's talk about the other kind of internal range liquidity, which I'll draw back down here. And it's called a fair value gap. So let's talk about what a fair value gap is. See if I can find the clearest ones. Right. For a fair value gap, what you're looking for is you want to see a low. In this case, so for a bearish fair value gap, there's a low. It gets broken. Once it gets broken, you see the next bar here. You wait for it to see what it does. And now you're looking at the wick. It's a 3 candle pattern as well. But what you're looking at is you're looking at the wick of the first candle and the wick of the last candle. Let me start again. You're looking at the low of the first candle and the high of the last candle. And what you're noticing is there is room between them. So that what you're really looking at here is, let's stretch this out a little bit so you can see, this area here was nothing but pure selling. It is an imbalance, okay? It is a gap that must be rebalanced in order to offer fair value to the buyers. So let's draw out a rectangle here so you see exactly what I'm talking about. I'm going to right click, change that color as well, white, and change that to transparent, something transparent. I don't know if that's clear enough. Let me change that. So here, trying to zoom in so you see it better. This is that gap. And it's the same thing, right? You look for the price to return to that gap to rebalance this imbalance. There's sellers, we need to fill that shit with buyers. Sometimes the market will only come as far as this candle's wick and then take off from there. Other times it will actually push far. And another thing that you may have noticed is that this is an order block. You can mark this candle alone, or you can mark 1, 2, 3, the entire high and the low. Why? Because they're consecutive, they're together. There's no red candle in between separating them. So you can mark them as all of that, or you could just focus on this one. That's up to you. The market pulls back in, and then it drops from there. So that can be an entry for you. And as I've said before, when you find a fair value gap just before an order block, it tells you that that order block is a very high probability order block that is likely to hold and play out. And in this case, it did. So you'd have your pending order just here. All right. Why here? Because this is where the FVG starts. Or you could put it for the order block. That's up to you, which is up here. But either way, you have your entry, and then where would you be exiting? You'd be exiting at the bottom of the range, which is here. Bottom of what range, you're probably asking? Good question. Look up here. Swing. Look down here. This low, the last swing before the market actively started pushing back up. And that is why this fair value gap counts as internal range liquidity. Okay? Sometimes you will see fair value gaps that happen without anything needing to break. You can mark those as well. All right? Now, I'm going to take you back. I said something about what do you do when you open up your charts? Pick one. You can have your Renko bar charts. This is for those of you who you get very confused. I'm trying to simplify your life. These boxes, they represent 25 pip Renko bars. All right? You could say to yourself, when a Renko bar closes, as this one did here, I'm going to set an alert up here. Remember what I said at the start. I said, if the market is planning to continue to the downside, when there's a range, the odds are it'll first want to come and attack the high before continuing down. In this case, that did not happen. The other option I presented to you is because we know that this is a Renko bar chart, we already know that every new bar is either going to print 25 pips down or 25 pips up. And you're anticipating, since the last break was down, you're thinking, okay, it should want to continue pushing down. There, problem solved with your bias. And I know it sounds a little too simple, but hear me out. Again, what you're using to save yourself from ruining your account is the fact that, number one, you have a limit on the number of trades you will take each day, on how much you're willing to lose. Number two, you're using a high pip, a high range frame, which means 25 to me is actually not that high. I would prefer 50 to 100, but that's besides the point. Right now, this is 25 pips, no problem. So you could either wait for the high to get taken, or because this is a Renko bar chart and you know it's going to print either way, if it's going to go down, it'll keep printing more 25 pip blocks. You can mark each 25 pip interval. And once the Renko bar is done, once it's formed, you can use the open of the next one as that external liquidity, as the start of the money. Let me show you because I feel like I'm talking shit. Hold on a second. So look at this. This guy has closed, and on this candle here, the next one, which is this one here, it just opens here. So you can pretend that this range is already complete. All you're doing is looking for reasons above here to be a seller. Okay? So when this one closes, that close price is also the open of the next one. And you could wait for the market to retrace here. We didn't get that here. When this one closes, you're waiting, you're using the open as an excuse for a reason to get in on the next trade. And in this particular case, what happened? The market actually did retrace through this open price of the next bar here. All right? What do you notice here? You notice there's a low. The low got broken. The low got broken. And that automatically means this is an order block. What else do you notice? You notice as the low got broken and then this other candle formed, it left behind a fair value gap inside here. So let's see if I can mark that out for you. From this point here to this point here. That's your gap. And what did the market do? The market tapped into it, rejected it, and then turned around and gave you this. If you wanted, okay, you wanted to get in on this move, you wanted something accurate, no problem. Let's go to the 1 minute chart. On the 1 minute chart, this is going to be tricky to navigate because of all these boxes. Give me a second. This is that move on the 1 minute. This is that fair value gap I marked out. This is the market trading into it. Okay? Look at it right there. And then it did what? Look at this low very carefully. This is a low that got broken. Once it got broken, what is this bullish candle? That is an order block. So you could have your pending order here. The market taps into it. Your stop loss would be above the high. And then where are you taking profit? Two options. You can exit at 50% of this Renko bar, which is what, about 12.5 pips. All right? 12.5 pips from the high anyway. So your actual entry is somewhere in here. You could be exiting down here, so you're not going to get the full 12. Or you could just get out just below discount. Or when it hits that 50%, you could say to yourself, yeah, I'm going to move my stop to break even and then observe. And what happens? The market eventually gives you the full thing all the way to the other end of the range. And then this is interesting because this is a 1 minute chart, but take a look. Remember, this square here represents the close of that Renko bar and also the open of the next one, this line here. This is the open of the next one. And what happens? You had a break in market structure. You had a fair value gap and an order block. And then what happened? The market wicked into this fair value gap. The wick, anytime you see a wick through liquidity, it's telling you, okay, so we tried, but we could not continue to push in that direction. At some point, this was a very bullish candle, and then it pulled back. The rejection becomes significant because it is rejecting actual liquidity. Before you start asking me again, what is the range? There is a range inside of here. 1, 2, 3, that's a high. And then down here, you have a low, 1, 2, 3. It's a mini retracement because it's a 1 minute chart. But you're starting to understand how this can play out, how you can use it. Let's go back up to a higher time frame. It's the 5 minute. So you didn't have a lot of opportunities like this, but they were there. They were there, absolutely. Let me look for a different, let's see. Lyrical. You're the one I'm actually, like, I care about everybody. Guys, don't feel bad. But I promised Lyrical today that I was going to be on his case. Lyrical, are you still here? Please quickly type so we know. Thank you, Tanaski, for the follow. Lyrical, are you here, man? Perfect. Are you following along? So let me take it from the top, okay? This is me. Let's open a new thing. I don't know what to do. I don't know how to trade, or rather, I don't know what's happening on the chart. Let's see. Let's look at GBP USD. I cannot use this template. It's too bright. All right, cool. And let's grab. So this is an hourly chart, but what I'm going to do is I will open up the, let's say a 5 pip Renko. Let's see. Now I can show you how to blend all of that together if you prefer to use regular candlesticks. That's an option. Okay. What do we have here? The start of the day. This is a swing. And not only was this a swing, this is the highest point. It pushed down to this low here. And then the market zigzagged around for a bit, did this, and then pushed up. At this point, what do we have now? We officially have a range. if you're using the swing to swing method. Okay, so let's grab this and make that transparent, not too transparent. Okay, so check it out. That's the high, and this is the low. This is that low here. So what did I say? Look to the left. You can see we've been pushing down. That's the trend. Okay, no problem. Now we have this push and this pullback. Now we have a range. What are we looking for? The premium to sell. What's in the premium? Right now you can see we had this low that got broken. So this becomes an order block. If you wanted to highlight this alone, that's fine. If you want to highlight the two, that's fine. So if this is an order block, then all you're simply doing is looking for opportunities to sell. You can have your sell right away. You could actually have a pending order, your stop loss above here to write it down to the end of the range or 50% of the range. That's up to you. Alternatively, let me show you how we could have framed this with a Renko chart as well. I will find, I think probably the Renko 5 will be a great example for me to point out what I'm saying. Yeah. No, let's go with 10. Give me a second. Fine, sure. So before that, I'm going to take you back to the 1 hour. What I'm doing there is I'm going to mark our order block so we know exactly what we're dealing with, right? This is the order block here. Excuse me while I change the color again. Hangman. All right, good. This is the order block, okay? Remember that. I'm locking it in place. Now I'm going to take you to the 5 pip Renko or the 10. I'm not sure yet. Let's see. Let's do. Okay. So at this point, the market trades up into here and then pulls away and pushes back up. I don't want to confuse you with it, but if you look to the left, in a sense, see where that order block was? Notice how, even on a Renko, it can be replicated. I'll show you. So now I'm just refining it. Because what did we have here? A low. The low got broken. We could mark the two of them as our order block, or we could go with the last one. Pay attention to what happened and how it came here beautifully. So you're here looking at the charts, and then this Renko bar closes like this. Boom. So what I'm going to do now is I will put a different rectangle here just to mark this because I want to show you. I'm hoping this gives me what I'm trying to show you. I think it should answer your question. So let's make that transparent so it's easier to see and bring it down here as well. So I'm marking the high and the low of this 5 pip Renko that closed bullish, okay? Now, let me go to the 1 minute chart and see what I can find. This is that Renko bar here. Do you see it? So I'm going to delete, do I want to delete this really? Is there a way I can do this without there being any confusion? I just need to change the color a bit. I'll make it lighter. This is that bullish bar. Think about what I'm showing you. Think about what I'm showing you right now. This is that bullish bar. It closed right here. But if you're looking closely, it may be a little bit blurry, but you can see that the market actually wicked above it a little bit. It wicked above that area. Remember what I said, that when you're looking at a Renko bar chart, just because you see a close doesn't mean there's no price action that happens beyond. In this case, it was very minuscule, barely up to a pip, like 0.2, so 2 points, right? But then what happens? You have a swing, 1, 2, 3 swing formation. If you are not feeling confident about entering the swing, even after seeing this wick rejecting that order block we marked out, no problem, because what else happened? What else happened was we have this low here. Pardon me, I'm looking for a way to do this without fucking up what I'm showing you. We have this low. We have this low. What happens? It gets broken by this bar. As soon as it's broken, what does this become? An order block. So you could have your pending entry here, your stop loss for just 5 pips, right? Or it got broken, then this bar closed. What do you have here? A fair value gap. So you could have a pending entry here, your stop loss above this or above the swing. And then what does the market do? Look at this for yourself and try to let's calculate this from that point all the way down. That's over 50 pips. Okay? And all of this based on the fact that we just started with our range. So maybe you wouldn't have taken the entire 50 pips. So our entry, if you can see that little red box, probably not. Maybe you just came down to the low of this range, that's fine. But if you're using a Renko, so let's try like that. Let's go back to that 5 pip Renko again. If I can find it, where is it? There. Okay. The market pushes all the way down, and this is the first retracement that you get. You can start using retracements as okay, because if you are aware the market's willing to continue pushing down, let's say you found a high time frame liquidity it's targeting, and I'll talk about that briefly. You have this bullish bar here. All I'd be doing, one of two options. Again, I present you with two things for everything for you to just pick one. If you wanted to add to the trade, how would you do it? Option number one is you mark this Renko. Let's get this out of the way and bring this Clara one. You mark this high and low when it forms. Why this one? Because it's a pullback. And why? Because think about what I've been telling you. That's why I said price. It's a story. It's the story of liquidity. Think of what I've been telling you. If the market actually plans to continue going down, then any pullback I get, I can just treat as an opportunity to hunt for reasons to be a seller above it. In this case, it didn't play out until the next bar. That's why I said this is option one. Option two is you can literally wait for the swing formation on your Renko, and this happens, then you go down to a lower time frame and you hunt for your fair value gap or your order block. Or if you guys trade with your moving average crosses or whatever it is, indicators. I don't do indicators, but if you do, whatever strategy is, because now you understand why you're taking the trade and it's not just random. So let's go and see how this one played out. I'll go down to the 1 minute chart again. And this time I'm going to delete this box because it makes it hard for me to navigate and hard for you to see as well. So let's go here. This was the moment that this bullish bar formed. That 5 pip bar, remember. Then you can start asking yourself, what have I noticed? If I'm to call anything a range here, okay, I can see that this high led all the way down to this low. And then from this low, we started to retrace. Oh, great, that's a range. Now within that range, I find that I am in the premium section. Okay, awesome. So we're not at the premium section yet but we start to notice that in the premium section, what do you have? You have a fair value gap. You have this order block here. Let me mark them out so there's no confusion. So here's the order block first. If you want to mark just one candle, that's an option. Or if you want to mark the two of them, that's also an option. Thing number two, you have the fair value gap here because this gets broken and then this forms. What is this from here to here? The fair value gap. And now I'll move this just to show you. I don't know why you keep doing this co-host thing. I'm trying to teach you. Let's move that up here. Boom. And what happens? The market actually retraces up here and then starts to move to the downside. That was your option one. Option two, I'm going to delete this now and take you back to that 5 pip Renko bar chart. And I'll put it simply by the time I'm done showing you what I'm trying to show you. Option two, remember, the entire premise is this is bearish. Option two is you wait for the swing to actually form. Where does the swing form? Here. In this case, remember, you're dealing with a Renko bar, which means that there is a chance that just because this guy closed here doesn't mean there might not be a pullback all the way to the top. So you have the option of either one, you could use the high. So this bar closes and now you're waiting for the market to retrace into this high. Or option two, this bar has closed and you're using this close price, which is the same as the open price of the next bar, as where to hunt for your order blocks and your fair value gaps. So let's go and see what happened on the 1 minute again. And the time frames and range frames I'm using are highly dependent on what pair you're trading and what your preference is, to be sure. So in this case, by the time this formed, what do you have? This is where that 5 pip Renko bar closed bearish, creating the 1, 2, 3 swing formation. And then what? This line that is the close, acts as the open for the next bar. What happens here? The market pushes down and starts to retrace up. This is a fair value gap. It's weird, but because you are using this as the area. It didn't quite retrace into it, but if you think about the fact that this liquidity is sitting right on that open price that you're hunting. And what did I say before about fair value gaps? I said sometimes the market will not go and fill the whole thing. Sometimes it just needs to tap it a little bit. So what could you have done? You could have had your entry. As soon as you saw the market retracing into the fair value gap, you could have said, okay, entry immediately, and I'm going to have my stop above here or above the second candle. I don't like the second candle thing because sometimes the market will violently disrespect it. So I'd much rather have my stop here. Why here? Because think about what the market did. It pushed down, it pulled back before pushing down again. So this doesn't look like a swing, but if you think about the story of price, which is just, it's pushing and pulling, right? It pushed down, it paused, it pushed down, it paused, and it pulled back. And this is the point from which it started to pull down again. So that's a safe place to have your stop. Over here. Excuse me while I disconnect this. It's getting in the way. Yeah, over here. So what I've shown you essentially, I'm going to go back up to the, let's go back to that 1 hour chart again. Remember, all of this was based on first we found this range. And also, not just first we found the range, we also knew that the prevalent trend was going down, is bearish. Look at all of that. I'm not trying to fight that. I don't want to fight that. For me to get into a buy, I'd have to see something significant play out that tells me, okay, maybe just maybe it's actually not going to work out as a sell. But I can't tell for sure unless and until the thing plays out on the chart. So what am I trying to say? Let's pay attention to all of the price action today, right? Let's say we've noticed it's been pushing to the downside, and we have noticed that. Let me show you something. I'm going to the Renko. This is just one more way you could play with things. One more way. That's all it is, okay? This is the day starting. This is the first bullish 10 pip Renko now. Each of these are worth 10 pips. So when I get a bullish one like this, I could just say to myself, all right, I'm going to the 5-minute chart to wait and see if I get some sort of sign or something that I should be looking to sell. Or the 1 minute. It's up to you. It doesn't matter. What's the point I'm trying to make here? Once you have discovered your bias, and there's multiple ways that you can actually do that, you can keep it as simple as, and I know some of you won't be ready to hear this. Let me show you though. It could be this simple. This is a 200 pip range bar chart. What does that mean? Each of these is worth 200 pips. Okay? And personally, I like when I see a setup like this and like this. Typically, I'd like to look for a buy, which is the same thing. It wouldn't have worked out in this case, and that's fine. That's completely fine. But it would have worked out for here, for the EuroCAD. Let me show you exactly what it was that made me want to take those sells in the first place. This is what I saw. I saw that we had this bar open, push all the way up here and pull back down. Bear in mind, this is 200 pips in a single bar. What does this wick tell you? That's a lot of selling pressure, and then it closed down. And then the market closed up again another 200 pips, but that push failed to break this high. So immediately I got excited. Why? Because I personally like to trade from external liquidity to internal. I'll do the other one sometimes, but this is what I prefer for me. So I saw this. Before this happened, I saw this and I was like, okay, cool. Then I hopped down to the 1 hour chart because I wanted to see what was happening there. And this was the 1 hour chart as at the time, before that massive move. And I kept thinking to myself, oh, okay, I'm going to look at this as kind of a swing, and I'm going to wait and see if the market actually pulls back in one more time. I was sleepy as shit. It's not an excuse. But unfortunately, I didn't get picked up for the move. The market, by the time I woke up, it was like it had gone. So what I'm trying to say is essentially, it's very simple. The reason you are confused, lyrical, is because you have not decided who you are as a trader, and I will help you with that now. Let me go to our notes. I will help you with that. I'm going to create a different set of notes. So the first, you have questions to go and ask yourself about. Number one, Number one, do you trade? No, first things first. How do you define your bias? What I mean by this is, do you look at the trend? And ideally you should, okay? You should look at the trend. Do you look at the trend? That's great. If you don't want to look at the trend and you want to keep your life utterly simple, then maybe do you go to the high range pip? Like, let's see, this is a 50 pip Renko bar chart. And then do you just open it and then look at what the most recent bar is doing? Oh, you see, okay, this one closed bearish. Okay, great. So I've decided that I'm bearish. Is that how you do it? Do you go to a 200 pip? It's really up to you. So you must make that decision though. And when you make that decision, stick with it. Stick with it because you have to train your brain to keep doing the same thing over and over and over again so that it's easy. So you don't have to think about it. It's a no-brainer. Okay, so how do you define your bias? Once you figured out the trend, or your bias, rather, once you figured out the trend and the bias, because a trend should lead to your bias ordinarily. But I'm speaking specifically to those people who you want to keep it as stripped down as possible. Okay, fine. How do you find your bias? I'm gonna add trend here as well, just in case. And trend. Answer that question for yourself. Number two, how do you define your range? Okay? So what is a range for you? Are you doing individual bars? Let me put that in brackets as well so you can see, for those of you who need to screenshot. Individual bars, swing to swing. Hang on a second. Swing to swing. Or what else is there? Yeah, just keep it simple. It could be that simple. It can be that simple. Number three, what kind of trader are you? So do you go from outside the box to inside or inside to outside? You know the box is the range. Okay? So let me type that so there's no confusion here. Number four, and this is still kind of like what kind of trader are you? But this one boils down to, are you a scalper? Are you a day trader? Are you a swing trader? If you're a scalper, you're looking for quick pips. So for me, scalping is anywhere from sometimes 2 pips to 5 and above. Like 2 to 5, maximum I'd say maybe like 12. And that 12 is only because I'm trying to cover the spread. So where I can help it, like if it's Euro USD, I'm okay with 10. And I call that a scalp, especially in a volatile market, like when you have the New York and the London overlap. Okay? So I guess how fast are your trades would be how I put it. How fast are your trades? Because if you're a scalper, they're going to be over really quickly, typically. Sometimes I have trades that hit take profit in a matter of just like 10 seconds, 15 seconds, it's done. If you're a day trader, that might require anywhere from minutes to a few hours. If you're a swing trader, that could take a few days. And if you're a position trader, we're talking about days, weeks, sometimes months. That's crazy to me, but like power to you. All right. So how fast are your trades? What else is there to ask? Right. Number 5. Do you favor order blocks or fair value gaps? Pick one. Just pick one. And I forgot to add here as well, Renko bars. Just pick one. Okay? What else is there to ask? Let's see. That's pretty much it. So I'm highlighting this for you guys to screenshot. How do I mark my OB, like with or without wicks? I like to. It depends on the asset. If it's something that has crazy volatility like GBP CAD and stuff, I will happily collect the wicks as well. Now, let me show you something that can be very straightforward. I'm going to clear, oh dear, I don't want to lose the notes, so let me use this other place here. All right. And let's go to maybe a 20 pip range bar chart. Remember what I said about the swing, because I'm going to show you something now. I'm going to get this out of the way so there's no confusion. Right. And remember the premise I gave you for this turning point in the first place. Let's go to 200 so you can see it for yourself, so you know I'm not just like pulling this random level. I said I personally favor external to internal liquidity. I'm looking back now and I wish that, and this is why even I got. I wish that I had used and just stuck with the range. But it's like, because I'm teaching people, I keep talking about Japanese candlesticks and then I find myself straying there and I don't I don't like it too much. But anyway, I explained this and then this, right? This pushing all the way down that wick telling me there's intense selling pressure, and then this one pushing all the way up but somehow failing to break that high. Granted, each of them is for 20 pips. Granted, there's a possibility the market could have flown up. I don't know. I'm just there to see if there's a chance. So because of this is where I got that level from. I'm going to show you something now. I just wanted to refresh your memory about why in the first place I would be looking for a sell there. So this is a 200 pip range bar chart. Remember that, meaning each of these bars is worth 200 pips. Now I will take you to a 20 pip range bar chart. Okay? And what did I say about a swing? And for range bar charts in particular, when you have the swing, the next two candles being the same. So it's a 3 candle pattern, the last two candles being the same, that's even stronger than when you have situations like this. But look at this. I've moved this shit, but no problem. Look at this here. 1, 2, 3. Once I have the swing formation, do you know what else I can do? Now that I have confirmed that the market is ready to turn in my direction, I'm going to put a straight line here. And there's so many ways you could do this. It's up to you. Just pick one. But I could just put a straight line here, which is where this next candle opens, this next bar. And I could say to myself, yo, what I'm going to do is I will just go down and wait for a 10 pip Renko or something, or a 5 pip Renko. That didn't play out here. And in this case, well, if it didn't play out, it did. But eventually it would play out all the way down here after missing all of that. And you have to be okay with that. You have to be okay with sometimes the market will run away and leave you, right? It's fine. Let it be free. What if I use the 5 pip Renko bar just as an example? So remember this line here. All I'm waiting for is what I like to call the anti-bias bar. Why anti-bias? Because it's closing against the bias. That's the pullback. Pullback bar, call it whatever you want to. I don't care. The whole point is once this happens, I have multiple options. I could say to myself, right, self, this looks like a nice time to be a seller. So I could say, as soon as the market is closing like this, I will sell. And because this is a 5 pip Renko bar chart, I will have from this point, my stop loss must be at least 5 pips away from this point, which does not necessarily mean it'll be a 5 pip stop loss, because if I entered late, it may be a little bit more. But think about what I'm showing you here. Or if I wanted further confirmation, because I'm really in the mood to be anal about it, what can I do? I can go down to a 1-minute chart. And now I'm going to scroll back to that area here. And this is that area. So I'm going to delete this so you can see it properly. This is that area here. This is that 5 pip Renko. What happened right here? Let's get this out of the way. 1, 2, 3. That's the swing. Okay. I could be in at that swing and have my stop there. Why? Because a swing is a turning point in price. Because I'm treating the 5 pip Renko bar, the close of it, I'm treating the area above it as liquidity, as where the stops are. If you're still feeling doubtful about it, no problem, because what happened? With that swing formation, this candle here broke this low. What did we say? As soon as that low gets broken, the last bullish candle that sponsored the move, that broke that low, that's your order block. What did the market do? It tapped into it perfectly. So your stop could have been, your entry could have been here, your stop would be here for about 4.4 pips, maybe a little bit more to cover the spread. And then it drops down. Or you could have used the fair value. It doesn't matter. There's so many ways you could do this. If I go back to, let's see how many other times I may have gotten an opportunity. I'm going back to the 5 pip Renko bar chart. This is another time again. Remember, all of this is after confirming on a high range frame, or for those of you who use time, use your regular Japanese candlestick, after confirming on a high time frame. or range frame that the market is heading in this direction, in one direction or the other. So now you know that all you're doing, how do I know where I'm going to? Simple. I'm exiting at 50% of that 200 pip range bar chart, or I'm going to at least move my stop loss to break even at that point and look to ride it out. This is for people who, if you want to keep adding, or maybe you missed the move. I didn't have time today to get into this, but look here. Once you have that bar that goes against you. But what would have happened if the market actually continued to print another bullish bar? Okay, then no problem. Don't touch it. Don't touch it. That's all it is. Don't touch it. Make sure that your stop from the previous trade is at break even and you've taken something off the table. If the market then starts to turn in your favor, maybe then you could consider looking for something. Okay? But in this case, what would have happened? Let's go and see again on the 1 minute chart how that played out. Oh, went too far. There it is. This here, this is when that 5 pip Renko bar closed. And in this case, try to think about what you're seeing to your left. I know this is not perfect, but I'm needing you to pay attention. I said the market is fractal. This is a 1 minute chart. I will grant you that. But if I were to go to like a 30-second, do you see this? The market pushed down here and then it started to pull back and push down. If I go to a lower time frame, there is a swing here. There is a swing. So you could count that as a swing. The market pushes down and then you have another retracement pushing up. So that's your range. What is this? The premium portion of this range from here to here. What's this? Order block. Notice how beautifully it rejects it. And if you had entered right, if you didn't want to care about all of this analysis and your thing was just, look, I saw a 5 pip Renko bar close opposite my bias, so I'm going to hop in there and have that 5 pip SL or whatever, or 6 pip. From that point, barely any drawdown. And remember, it's not random. We started this hinged upon the idea of liquidity from a high range frame, which in this case was a 200 pip range chart. Alamilekom, I can't start again. I just finished actually. So my lives are usually by 11 p.m. I repeat the same thing over and over again. So if you missed the explanation for liquidity, you can always come to the next live. It'll be tomorrow. My lives are from Mondays through Fridays. Friday is going to be psychology though, but I'm actually looking at it like I may just keep it to be... There's a second group now, which is within the group if you want to join it, but I'm particular about not throwing... I'm going to correct myself there. I'm particular about investing my time in people that will actually use what I'm teaching, because I've noticed that most people don't care about psychology. They don't care about the stuff that makes all of this that I'm showing you actually work, because it has nothing to do with the charts. So yeah, Mondays through Thursdays. I start my lives by 11 p.m. GMT plus 1 Nigerian time. Okay, so I think I'm done for today. Lyrical. I'm hoping that you paid attention all through. So this one was in honor of you. I'm hoping that tomorrow you will not be confused. But for you to not be confused, remember all those questions. You have to ask yourself, just because I'm showing you a bunch of things doesn't mean you should take everything at once. I usually show you mostly two ways of doing things. The whole idea is pick one. Pick one. If you pick one, okay, then we can move on. Freddie Black, thank you. The link is in my bio. If the link is not opening from my bio, copy the link and then open it in your browser. Yes, Julian E., absolutely. Your petition is the key to retention. Guarimpa Stylist, 11 p.m. If you're in Nigeria, 11 p.m. Julian E., you're very welcome. William Forex, thank you for liking the live. I don't know who's tapping right now, but I love you. Thank you for liking the live. Rick Charles, the teabag, who knows liquidation strategy? Sabri, you're welcome. Lone Wolf FX, so it's in the bio. Let's see. Erica Tastep. Wait, I don't want to ruin that name. I must read that properly. Eric Ratasep. Thank you very much for sharing the live. Lone Wolf FX, could you please explain how to trade the overlap in New York and London in terms of SNR and entries, please? Yeah. No. because I'm done, and also because everything I've taught you is exactly how I trade and it's exactly what I know. So if you want to trade the overlap of New York and London, then trade the overlap of New York and London. If you want to use what I've just shown you, the story of liquidity and whatever strategy you've already been using, then do that. You're just adding liquidity to it now to help you get better entries and exits and figure out when you're wrong about a trade. Because if you're in a bearish trade and the price is going down, you see a break in market structure, and then you're seeing a bullish FVG, that should set off alarm bells in your head that maybe you're wrong. And maybe it's time to close the trade before it goes too bad. Let's see. Mr. Sam, thank you for the follow. Corey, thank you for the follow. Mr. Dark Chocolate, thank you for the follow. Lamilekon, so like I said, come to the live tomorrow, 11 p.m. Let's see. BJ Academy, absolutely. Very Nigerian. Rip, you're very kind. Thank you so much. Amity Creed, you are awesome. Thank you. I appreciate you. Freddie Black, Yoruba. That's cool. I like that. Lyrical one. Since you're willing to teach me, I'll also try my best to learn, ma'am. Please do. I will download this live and upload it to YouTube as well and post a link sometime between now and later today so that you can watch it again and again. Loot season, I'm all about simplification, so I don't do dealing ranges. I just define a range, period. Anyhow you want to define your range is up to you. So the whole point of this, for those of you who don't already know me, is that I have been trading for 10 years. And 9 of those years, I absolutely sucked and lost money and blew multiple accounts and got into debts that I am still paying off, mind you. So that's the whole point of why I'm doing this is because I said to myself, when I figure it out, I'm going to share it and I'm going to make it simple for everyone. That's my thing. I'm not here to impress anyone. I'm not here to give you signals. I will never do that. Okay? And this is all based on what ICT taught, Michael Huddleston. It's just that I realized a little too late in my career that trying to learn everything is how I got my ass handed to me. You don't need everything. I wanted to learn everything. I sat down and I said I'm going to, and all it gave me was just confusion and heartache. So I try to keep shit simple. Shagun, if you're still here, we'll start the lives by 11 p.m. Technically, sometimes I'll show up a few minutes before just to say hi. Let's see what else. Yes, the YouTube link is on my page. Sorry, I was scrolling back. That's better posted on YouTube. Sure. Oh, wait, Freddie Black, you know you're about. I'm sorry. My bad. I'm sorry. I'd ask you, but I don't know about your privacy, so let me not ask you questions that you may not want to answer. Ezra, exactly. Simple. So, guys, if you have been struggling, Lone Wolf FX, you're very welcome. So, if you've been struggling, you just need to keep shit simple. Oh God, my hair. I'm such a mess. Every time I finish these lives with you guys, my eyes just go red. Like, bro, I can feel you people sucking the life out of me. Please don't ask me. Oh no, I was just wondering where you're from. That's all. Not that it's really deep, but I'm just happy that you're Nigerian. TikTok no grief follow. Please your YouTube channel. Hello. Me self, I'm not even to sabi. Hold on first. Make I go find out. YouTube. I don't know why TikTok is behaving like this. First of all, that's muted. Yeah, it is. Let me get the link. Just give me a sec, yeah? Hey, Amity Creed, thank you. I like yours too. It's really cool. It's really cool. Mr. Dark Chocolate, how you doing? Are you just coming in? We have been busy. I hope you catch us early tomorrow. We start at 11 p.m. So let me grab that link. Where is it? Where's my profile again? That's weird. YouTube. Your daughter's name is Anessa. Oh, I'm Vanessa, so twinning. Yes, Mr. Dark Chocolate. Definitely I'm done for the day. This is the part where I just vibe with you guys and then I will be taking off. Yeah, so my channel is youtube.com/ at I take ticks. You'd think I would remember that. Old age is a bitch, bro. So it's youtube.com/ at I take ticks. I'm not typing the full youtube.com thing, but so just think about ticks, ticks, ticks. Your bot clears your account. Yo, damn. Damn, that hurts. Did you program the bot yourself or did you buy it from somewhere? Did you buy it from MQL5 or something? And what happened? You've lost close to 1.4 million on gold. Yeah, I feel that. That's about what now? That's how much is that now? That's a fair bit, bro. That's a fair bit. All of them, where they find my smile. What is the smile going to do for your trading? Diana. Diana, what is the smile going to do for your trading? YouTube.com/ at I am take ticks. At I take ticks. Yeah, girl, you need to go to bed. I'm tired. Shagun, I know. You cannot be losing $1.4 and you be shining teeth here. No offense. But yeah, you'll get it back. You'll get it back. Markibauni. Alaikum. Okay, that's good. That's good. That's good. That's good. Then I did not answer my question. You bought the bot from a friend, made some profit, and it blew today. What happened? What pair was it trading? Your bot? And how does it work? Did your friend explain to you the mechanics? And I know typically with bots, yeah, there's like parameters you can tweak and adjust, and it may need to be adjusted from one pair to another depending on volatility and things like that. It helped to calm the nerves and regulate BP. Tall. I should start doing lives in the daytime. Well, I'll just stay and just smile. Abi, as my day trade, my day smile. Mona calm down. So, Mona can't see you, Jerry. BJ, no problem. What time is it in Nigeria? Right now it is midnight. It's 12:33 a.m. Okay. Did I miss anything? Yo, I'm still waiting for you. I'm waiting to hear from you. I didn't just ask for nothing. I'm actually curious. I'm sorry you lost that. You'll make it back and more, but I do want to see if there's some if you want it, if you want any advice at all. I'm curious. Did your friend explain how the bot works? Was there any specification, like only use this for this particular pair at this time? What trade did you lose it on? Anyway, all right. Seems like there's no questions or anything. Shag, when you make that money back, so don't worry, you'll make it back. 7:30 p.m. EST. EST. That's you're somewhere in the overseas. I see that. I haven't started the class at all. No, I haven't started. In fact, I'm not even here. Who's talking to you? It's not me. It's my spirits. My Telegram isn't accessible. So I think TikTok did something. They did something. I've been seeing people talk about links not being accessible. So here's what you're going to do. You're going to go to Telegram and you're going to type tick takers. And if you cannot do that, you go to t.me/tick takers. And if you cannot do that, copy the link from my bio and open it in your browser. Copy the link from my bio. The bot is trading GBP JPY. Okay, cool. Let me go see what happened today because I didn't open that one. What happened on GJ? Let me see. What time? What time were you trading? Or what time was the bot trading? Wait, hang on. GJ, haul my ass off to the 1 hour chart and see. That doesn't make sense. What should we focus on using ITC, ICT? I'm going to upload this live to my YouTube. So it will answer all the questions there for you. Ultimately, I cannot tell you what to focus on. So I just showed you two of everything. Two of everything for you to pick. Mwaki, thank you so much. I appreciate you, bro. Gilly5713, thank you for the follow. GBP JPY, there's no reason. Well, I don't know the rules of your bot, but from what I'm seeing, there's no reason. Like, if it was trading sometime around midday into 1 o'clock, we just swept a high, so that would have been an opportunity to short. That's what I'm seeing here. I'm also seeing that if you were trading before that time, which is sometime just before London, we had already created a range as well. Let me flip it around so it's not like I'm just talking. So this is GJ. And I'm trying to understand what your bot did because it's not as if I thought I would see a lot of chop. Maybe that's why, but it doesn't make sense to me. And I'm saying if your bot was trading just sometime before and during London, looking to the left here, we have this range, this high and this low. And you're in a discount portion here. So it makes sense to travel up. And in light of the previous price action, you can see that we've been ranging back and forth, sideways consolidating market. Notice that this high has consistently been held. So looking at the fact that you have this high that was created and hasn't been touched by these two until this point here, and now it's almost like it's equal highs. It's just screaming there's money sitting atop here. And then the market took it, but if you were not sure, this engulfing bar would have been the thing, the signal. So I'm not sure. Either way, there was enough movement. There was 70 pips to the upside and about 90 or so to the downside. I'm very sorry that happened. I have a deep fear of bots, and I'm the kind of person who when I mess up, I want to know that I did that shit. Me, I blew the account. Like, there was this thing I was actually testing out on a small account. I'm not happy about it. I'm not happy. Let me confess now. Confession time. I blew the account, and I'm not happy. But at the same time, I was trying to remember that I was testing something. So it's not as if I didn't realize that would be a possibility. Sammy the Great, thank you so much for putting the link there. Gilly, you're very welcome. Also, oh hi, lovely, all the way from the Netherlands. That's lovely. I'm walking. I don't use. I want to talk on. So everything that I've explained to you now, is what I use. Liquidity. So my thing is just always, for me personally, my preference is I want to see fair value gaps to validate what I'm saying. So I want to see a fair value gap validating the idea that the market's going to push in a specific direction. I also like to trade from outside of the range into the range. So me personally, I am an external to internal liquidity trader. Now there are times where I will take trades from within the range, but usually those trades are crystal clear, like they must be. But they're not as often as I like to see, okay, we've been pushing up and now I want to see some sort of pullback. And if I can get a pullback that I can take a trade off, fine. But my favorite thing in the world, let me show you. I don't know if I can find an example, but let's hunt for it together. So my favorite thing is when I can get I don't know if I could see it on G. Yeah, probably in here actually. Let me mark that. I think I'll find it here. So after those highs got swept, I'm just going to change this to white, make it transparent. And let me go to maybe this guy. So let's wait for a second, see what I get. I don't find them all the time, but when I do, I get really excited because I just know right away, okay, yeah, yeah, this is my favorite thing. My favorite thing is when I know that the market's supposed to be pushing one way. In this case, we know it's bearish because remember, we took the highs, right? On that other chart that we were looking at before. So my favorite thing is when I know the market is supposed to be pushing bearish and then I get this. Now, granted, I could have shorted this, but my favorite thing is when when I'm coming to the charts fresh. I would have shorted this, but my favorite thing is when I'm coming to the charts fresh and I see this one, two, three, or rather here, one, two, three. When I see the three patterns, so in a bearish scenario, when I see that bearish, bullish, bearish, bullish, when I'm looking for sells, that gives me so much joy because I know the odds are high that it may play out in my favor. That's one. And then number two is if the market does not work out the way I hoped it would, I will know really quickly. Why will I know really quickly? Because if the market starts to journey too far from this see this bullish, bearish, bullish here, this is the highest point. If the market starts to go too far from it, in this case it didn't, it was just by about 3 pips or so, not even up to 3 pips. If it starts to go too far, then I know I'm wrong. So let's look at this one. So that's a bullish, bearish, bullish. Not just random, not a random bullish, bearish, bullish, okay? Again, we've established that we know we should be trying to sell. Why? Because look at all these highs here. What's resting above these highs? Stop losses. What are they? Liquidity. So now, this is GBP JPY. If I go to the 5-minute chart, multiple things we could have done. Because I'm treating that high as above the high as an area of liquidity. Look at this. 1, 2, 3. How did we define a swing again? The turning point in price. Okay? So you could literally have entered there. If you don't like that, let's see what happened on M1. Such beautiful price action. So on M1, you have this low here, the swing low, gets broken by this bar. Once it gets broken, what does this become? An order block. The market tapped into it. Don't like order blocks? No problem. You prefer fair value gaps? Like me? No problem. So the market breaks it, then this candle forms, leaving behind this gap here. Okay, great. So you can have a pending order at the start of this gap, confirming to you that the order block is high probability. So you can watch that shit. The market taps into it, boom. All right. So that's one of the things I love that I just showed you. I love when I get that setup. And for me, I want to be very clear. When these setups happen, I prefer for, so in this case, look here, we have this bearish, this bullish. I like when the close is very close to the high, not breaking beyond it. Look at this one, when this close is bearish, I like that it's close to the low, not breaking beyond it, and I don't have a wick. I don't like the wicks because remember, think about what the wick signifies. That would be bullish pressure. So I love when the closes are close to the most recent highs and lows, if that makes sense. Look at this one, closes very close to the high. So you could keep taking advantage of that until eventually you definitely would have, if you tried to buy this guy, you'd get like maybe just a little bit of movement, but then it would drop. And this is why I keep saying, try to remember the context, the trend, the liquidity that's been taken and all of that. All right, let me quickly flip around and check out the comments that I have missed so far. We're drawing dangerously to 1 a.m. It's automated, so I check my profit every month. I know nothing about trading, nothing. Oh, yo, I'm so sorry. That's even more heartbreaking. I don't like when people. I'm sorry. I'm sorry. I'm just going to leave it at that. I wish your friend had better informed you of the possibilities of your money going. I mean, we're human beings at the end of the day. Like, there's professional ways to do things, but ultimately, like, we're human. It's just people helping people, and I'm sure your friend probably had the best intentions. I've had a situation where in the past where a friend gave me some money to trade, and the agreement I got into them with them was, if I lose this, I'm going to pay you back every cent. Like, it's not an option. And that's because for me, I value the friendship too much, and I'm the kind of person who, I just can't rest when I'm owing people money. I can't rest. I'm sorry. So, but yeah, I just hope that you'll get it back somehow. You will. I'm so sorry. Okay, I use pure price action attached with the time-based liquidity, just like CRT concept. Yeah, I've been hearing that CRT stuff. Paco P. Sister Schmecks. Sis, why do you want to know what I trade, sis? Hey, sis. Since that's what we're doing. Louisia, I do not trade gold, but it's the same. It's the same thing. I would advise. I always say to gold traders, please look at H4. Anything else beyond that, I don't know. But BJA, I do more of crypto trading. Do the same technical analysis work for crypto. I have looked at some crypto charts before. What I will say is the same thing I've always said. Even with there was a particular live we even looked at synthetics. Price is price. It does the same thing. As long as the candlestick creates a high and a low, as long as the price continues to push and pull back, which it always will, because think about it, if the market just went straight up in one direction forever or straight down in one direction forever, we would not really have much of an economy, would we? Trading wouldn't really be a thing, because why would they want to just literally give you an infinity money printing machine? So as long as you have pushes and pullbacks, there will always be ranges. As long as you have ranges, there's always liquidity. The same thing. And whenever you find yourself at all-time highs, by the way, I wanted to say this. I said it in a video. I said I'd say it on the live. You find yourself at all-time highs or all-time lows, you can create your own ranges still. You can still frame the trade, because the whole point of ranges is to keep you from being confused about what to do next. So, like, let me even see what happened to the S&P today if we've pushed even higher. What the? Shit, Lana. Shit, Lana. Shit, Lana. Those of you who trade S&P. So yeah, but as at last week, if you were confused about what to do, you could literally just create your own ranges. Think of like a Renko, but whatever would be appropriate for whatever asset you're trading. Lyrical, you're very welcome. Rest, practice. Take your time. If you're still here, take your time, relax. Okay? Amwake, I personally like IC markets. I've been using them for the entirety of the 10 years. And then Just Markets. Just Markets I started working with recently. As recently as, let's just say a few months ago. Ashif, thank you for the follow. Sammy the Great, thank you. Batu, thank you. Sammy, no mind me. I want to start learning and trade by myself. Y'all, please go to babypips.com/learn. Again, babypips.com/learn. BJ, anytime. Anytime. Hey, Vusi, thank you. Thank you so much. You are so kind. You are so, so kind. Lyrical, bye. Take care. Okay, guys, I'm going to call it a night. Thank you so much for being here. And as I always say, remember, you already are great at this. You are called to this for a reason. It is not an accident. And I'll continue to see you as the master that you are until you one day see it for yourself. I hope you do. Keep coming for the lives. I'm always here. 11 p.m. GMT +1 Nigerian time. There's no daylight savings, so it's always 11 p.m. for me, GMT +1. Find out what that is for you, and you can make the conversion there. I will never DM you first. Anyone who's going around claiming to be me, DMing you, asking you to pay them money for anything is not me. If you want to join the Telegram group, copy the link from the bio, paste it in your browser, and then it'll take you there. Telegram itself does not allow opening links anymore, which is weird to me because why even put the option? I mean, TikTok, why put the option to put links there? So copy the link from my bio, open it in your browser. I don't give signals, I never will, because that's me robbing you. And what else do I want to say? Those of you who are interested in the one on one mentorship and can afford it, I am closing this shit by the end of this month, which is actually, yay, is just so on Thursday. Friday is the 1st. So August 1st, it's closed. So if you want to join, you join in. There's only 4 slots. I don't have the energy to deal with too many people. I'm sorry. And if it's too pricey for you, don't feel bad. Keep coming to the lives. Keep coming to the lives. Keep practicing what you learn here. I promise you, it's more than enough. The mentorship is just for people who want one-on-one. They want one-on-one time with me. And as I always say, I have no shame about it, about charging you for it, because I come here and I pour myself on these lives. The time that I offer you for free is free. And the time that you want that I'm not offering, well, that has to be compensated. So if you think I'm going to go around trying to be a saint about it, no, not. I'm also working on a book that covers basically everything that I share here, both in terms of charts and in terms of psychology, which my brand of teaching psychology is very blended with spirituality as well. If you're interested in that, no worries, give me about a month from now, the book should be ready. So, yeah, that's about it, people. EA Eric, you're very right. Guys, I appreciate you. I appreciate your time. Thank you for letting me speak to you. Don't just trust everything I say, go and actually check it to be sure that it works. And I appreciate your time. But more than that, I appreciate you investing in yourself. So go, even if you don't know, you've not listened to me before, you've not tested it out, go and look at your charts with the intention of proving me wrong. I dare you. I want you to actually look at your charts. I love skeptics. They're the best people. Anyway, that's about it, people. Peace and love. Freddie, I see you. Guys, I will be here tomorrow, 11 p.m. May the pips be with you and may the markets favor you.